It's just about 6 years since Bear Stearns started the financial crisis. And now we have some proof that maybe all those bankers' explanations, not exactly kosher. The Banker's New Clothes, What's Wrong with Banking and What to Do About It, is co-written by Anat Admati, and she is here joining us live today. So what is wrong with banking and why do we get into this mess?
Well, one of the things that's wrong with banking is they tend to borrow too much. They tend to rely on a lot of borrowed money to make their investments. When you borrow a lot, just like a homeowner that buys a house with very, very little down payment, if something goes down a little bit, then all of a sudden you're distressed, and all of a sudden you can't continue lending if you're a bank, or you run into trouble and then you don't want to fix your windows also if you're a homeowner. So it's very fragile, and then they're all interconnected together.
Well, I thought that when you think back on the financial crisis and we see that Tim Geithner said there are stress tests and banks are stronger now, what's up with that? Is that not true?
Maybe they're stronger and they were supported heavily to get to this point, and they're benefiting from very cheap interest rate right now and all kinds of good conditions for them, not all of which they pass on to other people. That doesn't tell you where we should go or where we can go with not a huge amount of effort if we wanted to go there, which is to a much, much better, safer system than we have right now.
And what would that entail?
First and foremost, deciding to check very carefully and make sure we clean up the mess from the last crisis, which we haven't done yet.
What has to happen there? I mean,
they have to recognize the losses, and some of them are not recognizing them. That's even a reason that they might not restructure loans, because they don't want to admit that they lost.
So I still have that smelly
mortgages.
stuff on my balance sheet.
Yes.
This person's never going to pay me back.
Yes.
But they don't want to actually say, okay, it really was a bummer
loss.
of a loan and it's a loss and I'm going to recognize it and move on. But isn't it better for them as a business to just recognize that and move on?
It's not necessarily better for them as a business. It's better for us that they recognize it, because we want to know who is actually a viable bank. Some banks might be too weak, and we want to know that. In Europe is filled with these zombie banks, and some people claim that some of the US banks, even some of the two of the biggest ones, are in that category. If you were to actually look closely, and if you were to remove some of the subsidies that keep them alive, you would find that there is not kind of enough there, and they're just being sort of nursed back to life. And the two that are being mentioned, I didn't look into it carefully, are Citi and Bank of America. So we don't know, but they're being brought back to life. The point is that the ones that are viable have to be strengthened, and quickly, because only then will they be able to support the economy, make good loans, and all of that. So they have to be made healthier, and that basically means that they should build up their equity funding, meaning they should retain their profits and do something with them that's a good thing, ideally lend to good businesses, and in general back up their liabilities so they're not less dependent, they're less fragile, so they're less vulnerable to downturns, and they can keep going.
What happened to this industry? This was an industry that was sort of a proud industry. We take companies public, we lend your small businesses the money they need, we help you acquire a loan. This seemed to be a pretty simple business until the repeal of Glass-Steagall, where we had, commercial banking and investment banking merge, but something happened along the way. What happened to this simple model where it seems they made money?
Well, I don't know that it's exactly the break of Glass-Steagall. There was a lot of things happening in this industry to make it face more risks in the real world, more interest rate changes, more exchange rate changes, become more unstable, but also to find many ways in which to take more risk, derivative markets, more fun things, more ability to scale up the risks and to sometimes hide those risks. And there was a certain focus on risk taking that ended up giving incentives for them to kind of avoid the boring business of making loans and go for more exciting things. And the regulations changed in ways that sometimes even encouraged that in some kind of a perverse way. And so there were a lot of things that happened that just sent them into other activities and other things.
But is the genie out of the bottle? I mean, did we miss this great opportunity? I remember when, Tim Geithner and the president, they were all talking about, oh no, we can't make it too much stronger because if it's too tough a regulatory environment, the banks aren't going to make enough money, or they're not going to be able to, the financial system's going to collapse. And the bankers were certainly saying that, but the politicians, you heard them saying that as well. Is it baloney?
Well, I think that the reform effort just went in all different directions and it was kind of unfocused. So it didn't focus on the right things. Ended up giving a lot of authority to regulators that already had it and have expanded authority. So there's no problem to do. We don't need new laws. Some of the regulations make more sense than other regulations, but they should go to the heart and do the most cost-effective things that we can do to create a stable system for the economy, because that's mostly what the economy needs, is a stable banking system that supports, that makes loans, that is on its own and is safe and takes deposits and all that.
So what are if you had to say three things that if you could wave your magic wand, your Stanford wand, which works miracles, I understand, what were the three things that you would love to happen right now?
I would want to check the health of the banks for real. Not these stress tests are not good enough for me because of various things that I won't get into, but to actually see who is a viable bank.
Like an exploratory surgery, we're going in and we're really going to look.
We're going to look, or we're going to ask people to see how they can raise equity or certainly retain their earnings, everybody. If they retain their earnings, nothing bad happens.
So get real about what's in there.
Get real about what's in there, see who's viable and not viable, and those who are viable, strengthen them as soon as possible, which is a lot faster than they're allowing it to happen. This muddling along is not healthy. Japan suffered for 10 years from having, muddling along banks. So you want to get a stronger banking system. In Sweden in the early 90s, they did it much better. They went in there, they sort of faced reality, and they strengthened the system using good banks.
We go and we look what's there, we clean it up. What else?
And then we strengthen the banks and make sure that they have a more resilient funding mix than they have. They don't rely as much on borrowed money. They become more like other companies in the economy that even though we don't force them not to borrow, they don't. So the banks just like to borrow a lot, and they kind of became a bit addicted to borrowing. And with all the safety nets, we feed on it. We make it easier for them and more attractive for them, but we have to fight back. It's as if we subsidize somebody to speed, and so they would speed. We have to make sure that they don't succumb to that addiction.
Are we going to have to wait for another crisis for this to happen? Because it sounds wonderful. I want you to fix banking. I want you to wave your wand. I want all of that. But it feels like we're removed from that. And that kind of reform often will happen. It certainly happened after the Depression. We got real reform, and there didn't seem to be so many big accidents in banking till this one. And so are we going to be waiting for one more crisis before this happens?
We might. I hope not. I hope that we can generate more debate, more discussion, because it's not enough on the agenda, and I think that's wrong. Sheila Bair wrote her book saying, please, Main Street, tell them to take care of the problems in Wall Street, and the message of our book is the same. Something is wrong with banking, and we can fix it. That's the thing, is we don't just complain. We say there is something to do, and they've fooled us into thinking that there is terrible trade-offs involved, that we have to give something up. We can have a safe banking system, and it can still work even better for the economy than they tell you.
Anat Admati, thank you so much for joining us.
Great to be here.
And thank you so much for watching. Stay right here at CBSNews.com. We are covering the banking industry, and we're not letting them get away with anything. Thanks for watching.